To our global CTKS family, we're grateful that you're here. All of us together make this one of the best communities on YouTube. Here, we use the world's leading indicator of price, the CTKS method, to give us X-ray vision across stocks, cryptos, forex, commodities, and yields. So we can see what the top 1% in financial markets see before the move happens. That's a license to print money and a way to stay safe. Whilst others are panicked, we are calm. When others guess, we stack probabilities. We don't fall for hype or stories, we profit from reality. We know making just 3.5% per week is a 498% profit per year. We are the elite 1% in financial markets. Price moves in waves, so no matter if price is going up or down, please be kind to yourself, be kind to others, be dedicated and committed, and never blame. Instead, learn and grow into the best version of yourself. Let's see what the markets are doing today. When zooming out and looking at Bitcoin on the daily basis, from around the start of October, we've seen that we're in an increasingly negative downtrend. This downtrend can turn around when we get above $100,000. We can see when we look at strategy, formerly MicroStrategy, it's been under pressure for a great degree of time. But let's overlay Bitcoin on this and see if it's not diverting too much. What we can see is that strategy has been quite weak, but it's still following the directional momentum of Bitcoin. When Bitcoin goes up, strategy goes up. When Bitcoin comes down, strategy comes down. And you can see it playing out here with regularity. Strategy is influenced by the direction of Bitcoin. In terms of CTKS paths, which are level 2 standard certification, how has Bitcoin's price this month interacted with structure? We saw at the start of the month it was going positive, but it just quickly went negative. Came down into structural support, broke through that, had a bit of a rally up, and then we've seen it largely has followed the negative price path. At the start of the month, Bitcoin was around 109,000. We had a negative price target of $80,423, which was set at the start of the month, the start of last month. If you listen to financial media, you're going to get a lot of conspiracy stories and a lot of either fear of missing out or fear, uncertainty, and doubt. After decades of being inside financial markets, structure is the undoubted winner. Now we've seen Bitcoin bounce from that low around that 80,423 target up to its current price, which is 91,290. As a trader or an investor, one of the most important things that you can ever do is to understand where structure is. For example, if we drill down inside Bitcoin structure and we look at the current price, where is the structural support and structural resistance levels? Are we at structural resistance or are we at structural support? The difference between the two is seeing your investment either skyrocket up or plummet down. What we can see is that 82,500 we have structural support. We have structural support at the 87,250 and structural overhead resistance, and quite a lot of it at the 93,000. If you look at a chart like this, getting that understanding of structure would be almost impossible. This is why we have level 1 and level 2 standard certification. The first step before you trade or invest is to understand where structural support and structural resistance levels are. If you don't do that, you're likely to buy at structural resistance only to see price go down. The strongest levels of structural support and resistance are found through level 1 and level 2 standard certification. When we look at total crypto market cap, where is the structure across the entirety of the crypto market, which is currently $3.07 trillion? Let's just pop on the service indicator and check it out. What we can see just up above around this $3.08 trillion, there's a lot of sellers inhabiting this level. So far, the sellers have been winning. Now, if the sellers win and push the price down, we can see structural support around that 3.06 and 3.05 trillion dollars. If the bears get their way, they would seek to push total crypto market cap down to around this $3.04 trillion. Now, what it means, if the bulls can get above 3.09 trillion and consolidate around there, we're looking fairly good. Where are the next levels up? Well, we've got a positive CTKS gap. I'll just leave the gap at that. So if we get above 3.09 trillion, we could see fireworks inside the crypto market. But under the current conditions, we are under structural resistance. The market story is undoubtedly AI, and when we look at the structural paths drawn at the start of the month and projected into the end of the month, we can see that NVIDIA, which is the undoubted king of AI, is currently following the normalized negative price path. The target for this month was already reached on NVIDIA of 171.24. It's the weakness inside NVIDIA that's causing so much trouble across the crypto market. Why is that? Because NVIDIA represents the risk of the AI boom. And for this month, the AI boom has been taking a breather. Inside the Profiting Masterclass, I give some indication of the checklist that you need to just put in place before you do any trading. I'll just give you the very first part of this. We must do the cheat sheet first. Understanding how structure and direction impacts every market is vitally important, and we will understand why NVIDIA has been coming down. We need to take trading and investing very seriously and obey all of the rules. Trade systematically and invest systematically to profit and not just to participate. Focus on understanding structural passes, structural failures, and all of the CTKS edges that you get. And always remember, capital preservation is far more important than being correct. Capital rotation, you can use it to reset and preserve your capital. Preserving capital is much, much more important. Just keep your losses under control and always plan for three-dimensional price movement. Now, what is 3D price movement all about? If the price is here, the price can do three things. It can go up, it can go flat, or it can go down. Now, if you're going long, you want to consider the down case first. But before you do anything, looking at the cheat sheet and understanding structural direction is absolutely vital. There's a lot of free resources at ctksmethod.org, and if you just scroll down on the homepage until you see this, your cheat sheet to mastering price action, you can just download it here absolutely free of charge. This cheat sheet is invaluable. When you look at the cheat sheet, row 1 and row 2 are vitally important to understand. These are the risk on and risk off rows, which will directly impact the stock market, major leading indexes, and their subcomponents, but they'll also impact the entirety of the crypto market. When we're trying to understand, is Bitcoin going to turn around here and forge through this and resume a bullish case, or is negative price momentum here? Are we going to go down from here? Are we going to find structural resistance? You already know a lot of these answers already, but the cheat sheet gives you the direction. If we look at row 1, which is the VIX, the DXY, dollar yen, the 10-year, the 2-year, and oil on a daily basis, we can see the VIX has been doing something really interesting. It's spiked up hard, and then for 1, 2, 3, 4, 5 days, it's been coming down. Now, that has put a degree of positive momentum inside of the crypto market and, of course, inside the stock market as well. But 5 days of retracement, we would anticipate some kickback and some kick up sooner or later. This is the reason that we need to think in terms of 3 dimensions, because when you look at a price chart, you may think that the price chart, say for example Bitcoin determines Bitcoin's price. It is quite shocking that Bitcoin doesn't determine Bitcoin's price at all, Bitcoin's price is intercorrelated and interconnected between different markets. We can also see that the yields have been coming down. When the yields come down, this puts positive price momentum into gold and silver. And silver is generally more sensitive than gold because it's a smaller total market cap. We can also see that there's negative price momentum in terms of oil. Oil you can think as a proxy for economic activity. If oil is going up, yes, it's inflationary and that is bad, but it's also good for risk-on asset classes. When we get into row 2, which are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper, again, daily basis, and going from the start of October, we can see as junk bonds have come down, they've pulled down the crypto market. This will also pull down the stock market as well. We know that yields have been coming down, the 10 and the 2, which are placing positive momentum inside silver and also gold. We've also seen that copper has been going for it. This is purely and utterly because the VIX has been backing off. If the VIX spikes, we're going to see some interesting behavior inside copper. We can also see that the Aussie dollar has started to try to break out of this. But the thing to just bear in mind, if the VIX starts to spike up, the risk on will leave the market. That means the prices will come down. People get really confused when it comes to the interrelationships between the major market indexes and Bitcoin. They follow each other. Bitcoin is just another asset class. It can be really volatile, but it's still an asset class, and all asset classes are intercorrelated and interconnected. So when we look at row 3, which is the S&P 500, the NASDAQ Comp, the Dow Jones Industrial, and the Russell 2000, we can see as the major market indexes went up, Bitcoin went up, and as they tanked, October the 10th, crypto tanked along with it. Unfortunately, as the crypto market is a very small market, it can get scared very easily. And one of the reasons we haven't seen a lot of upward momentum inside Bitcoin, inside the crypto market, is people are scared about JP Morgan, BlackRock, and Strategy. JP Morgan is thanking many people in the crypto market for their panic. If more people understand how the markets actually work, there would be less panic inside the crypto market and more quality information. Please let me know in the comments, do you use the news to inform your trading and investing decisions? Or do you use structure? And what type of structure? Retail structure or CTKS structure? And as an added bonus, what do you think the difference is between retail and CTKS structure? It's very good to test out your knowledge. When we look at the futures as opposed to Bitcoin, and especially look at the ASX and Bitcoin, the ASX is Australia's major index. Aussie, you do us proud. We can see that the major market indexes have all been rallying, and this is because the VIX has backed off. And you saw right up front that the VIX has backed off in a big way. When we look into row 4, which is Apple, Tesla, Microsoft, Nvidia, and Strategy, one of the things that really just sticks out, and this is on a daily basis, same time frame, start of October. When we look at Tesla, Tesla is a really good proxy for Bitcoin. And notice how suppressed Bitcoin is at the current time, how suppressed Strategy is at the current time as well. Also, Microsoft gives, when you look at Bitcoin, you can gain some understanding. If Nvidia is coming up, or Microsoft is coming up, if Apple is coming up, or it's going down. And this is one of the great things about Bitcoin. It gives you a risk-on or risk-off sentiment indicator. Now, why is Bitcoin so suppressed? Because it is really suppressed at the current time. The reasoning and logic for that is that the VIX, Bitcoin sniffs out VIX volatility. It's really important to know where your levels are. For example, around that 3.08 trillion, the bears have got themselves into control, but around the 3.05, the bulls could take over. But we understand all markets are equal markets. If you were trading or investing inside Ethereum, 3050 is the level to watch to breach overhead structural resistance. And you can see this red line, that's the target for this month at the $3,000 level. That was reached. Litecoin inside row 6 is currently at structural support, just trying to figure out if it becomes structural resistance. Bitcoin Cash does these kind of big surges up and then does tend to decay. So just be aware, everything is structurally based. And when we look at BNB, which is the world's largest crypto exchange, around that 875 and a little bit under the 883, that's the structural support. 900 is structural resistance. Knowing where structural support and resistance levels are is really important. When we look at ADA, which is currently 4232, overhead structure is at 4322, light structure 4122 for structural support, and then it gets heavier around the 4040 mark. With Solana, overhead structure at 14012, overhead structure 13906, and also 138.50. Solana is currently 137 and 10. Doge has a lot of sellers inhabiting the 15111 mark, so please be aware of that. Structural support at 14,801. Doge is currently 14,875. When we look at XRP, which is currently 219.05, we have structural overhead resistance at that 222.66 and structural support at that 217.71. When you combine an understanding of direction and momentum with structure, it's an absolute game changer. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.